Glorious. Appreciate y'all tapping in on this glorious Sunday. Today's date is February 15th. Weekly outlook. Yeah, let me go ahead and mute everybody. Appreciate that. Please keep yourselves muted if you don't mind. With that being said, we're gonna go ahead and get this call rolling. Definitely appreciate y'all for tuning in on this Sunday. You guys could be doing anything, but y'all here with me. Definitely appreciate that. I like to do these calls every Sunday to make sure we prepare because if you stay ready, you ain't got to get ready. And these are just calls giving you guys an outlook on what it is that I see potentially happening, in the markets. Now, we went absolutely crazy last week. I mean, what we did to the markets last week. Well, it should really be studied. You know what I mean? Because, I mean, man, we really went stupid. Even one day, we ended up hitting like four targets in the same like New York session in a matter of a couple hours. So, it's good to get these outlooks, on a Sunday, but just definitely keep in mind, markets do change every day. Every day you log in to your trading view, every day you get on the computer, you gotta, check the charts, make sure things are still lining up, do your analysis every day. So, but this is just what it is that I'm seeing, as it stands, 6 p.m. Central, on a Sunday evening. All right. Now, with that being said, I do like to, just kick the call off with a little quick, I ain't gonna be long, but I do like to start it off with some quick, mindset, just to kind of make sure you guys are in the right state of mind, to do what it is that we need to do. Understanding that trading is not easy. It's one of the hardest things that you'll do, but once you master it, you get better at it exponentially. It could take you years to get your first payout. It could take you years to get your first real, good profits, a big withdrawal, whatever it is that you after. But once you expose yourself to it, and once your brain it can conceive the possibilities. Once you prove to yourself that you are capable of doing this, that's when you start getting the exponential growth. They say the first million is the hardest. They say the first payout is the hardest. Being your first profitable, year in trading is the hardest. But then once you actually figure it out, once you like mentally hack whatever is holding you back, and then that's when you can kind of, step into your flow, step into, that growth season. And so many traders I've mentored over the years are starting to experience that. So I'm definitely grateful, just to see the growth and the development of everybody, that's been locked in. Realize if you ain't been doing this for a while, you're just getting started. Give yourself time to grow, give yourself time to learn, give yourself time to make mistakes, and understand that you are asking, for the entirety of your life to be changed. And it's gonna take a little time. You know what I mean? It's gonna take a little. Let me see. Apply these permissions. Smitty is requesting to record to their computer. Let me see. Hold on, real quick. Um, I just got a little something, something. Oh, you ain't got to record. It's gonna be. I'm gonna put it on YouTube. I'm gonna put it on YouTube, so y'all be good. Um, but yeah, guys. With that being said, give yourself time to learn, to grow, to develop. Because again, you're asking of a lot. You know what I mean? There's billions of people on the planet, and you gotta ask yourself, why do you deserve financial freedom? Why do you deserve to be able to, live life in abundance, by pushing buttons on a device, on an electronic device, it's gonna come with a significant amount of hard work. And like I tell my team all the time, I believe giving 95%, giving 98%, it's not going to cut it, right? You'd be surprised how much that 1 or 2% weighs, So some of y'all think you putting in work. And, a famous saying in the Marines is when you feel like quitting, you're only 40% there, and when it's in terms of this trading journey that you own, if you ain't wanted to quit a couple times, if you ain't feel like, you just couldn't buy a win and you feel like the market's personally out to get you. Trust me, like we done all been there. And it's just a part of your journey. It's a part of your development. But just understand, God has a funny way of blessing you when you really truly give it your all. He ain't gonna bless the people that pretend to work. So if you're not giving 1,000% effort, you might be giving 95, 98, 99. But again, you'd be surprised how much that 1 extra percent weighs in the totality of trying to manifest your goals. So with that being said, just fall in love with this process, man. Fall in love with the process. fully immerse yourself in this process, and you'll look up and be a lot further than you were, and it's grateful. You'd be grateful to be able to look back on your journey and realize that you put that work in and you never gave up. All right. But this ain't a mindset call, it's a technical call. So we're gonna get directly into it. All right. So Nas 100, what is it that we see going down? All right. I'm gonna clean this up just a little bit so you can kind of get a vision of what it is that I see. Okay, starting from the higher time frame perspective. Okay, this is my IG. If you guys don't know, I want to give your boy a follow. It'd be much appreciated. All right. Um, so with that being said, I am still bearish on Nas overall. All right. I am still bearish on Nas overall. However, okay, in order for us to go bearish again, I do want us to retrace, okay, a certain distance. I would like for us to come up into this gray shaded zone that I have here. All right. And I would like for us to clear out these highs that I have marked up right there in order to go bearish again. Now, I'm using multi-time frame analysis to kind of help me come to this, conclusion because I am still bearish. However, the market needs to go bullish temporarily in order for me to continue bearish long term. So I'm not just going to wait, for the market to come all the way up here before I start selling, right? There's moves within moves, there's trends within trends. So I do believe that the market is going to make this higher low right here and continue bullish. And the reason why I see that happening is in order for this market to sell right here, there needs to be a future target. Okay. And the future target typically looks like this if you have a good understanding of liquidity. All right. A future target typically will look like a W pattern, but the second dip is higher than the first one. All right. And the reason being is because that means there's a lot of buyers that got into the market here and they have not yet been liquidated because the market made a higher low. So if we look at this right here, we have a low right here. All right, market created a low, and now we create a higher low right here. So me looking for the sell in the future, I can somewhat predict that this higher low is going to hold. And the reason it's going to hold is because we need a future target for the sales to go attack. All right. So this is a good way of how you utilize higher time frame and multi-time frame analysis to give you a good insight of what's going to happen right here, right now. Again, in order for this sale to have a higher probability, it needs to create a higher low right here because that is going to create a target right here. Now, if the market did this, let's say the market created a low and then we took that low out before we started going up, then we would have what is called a liquidity sweep. All right. And if we have a liquidity sweep, that means that this side of the market is likely to be protected. Okay. Protected meaning that the market probably isn't going to drop down lower to that point. Okay. So, in understanding that, I realize that these lows have to be a future target, but in order for us to get the proper sell, we should also clear out these highs here and these highs here, because what that would do is give us a strong high pattern. Okay. So what I'm looking to have created is a strong high with weak lows underneath. Okay. So to draw it out in a straight line, what I'm looking for to have happen. All right. So we got this. Market comes up. We got our hezzy, crossover. Market comes back, it ranges, and then it drops, and now the market is right here, okay? So now the market is right here. Now, based off my hezzy crossover principles, all right, the market indeed hesitates off of demand right here, all right? All right, so the market hesitates off of demand right here. All right. When the market hesitates off of demand, it creates what we call internal range liquidity. All right. This is the place where we sell from moving forward. Okay. Now, internal range liquidity needs to be taken out before the market can continue to make new lows. All right. So this is an area that we're waiting to get taken out. Now we realize even though the market dropped right here, we have not yet taken out internal range liquidity. So there's a good chance that this sale is temporary. Okay. It's a good chance that this is a false sale. Not to say you can't make money on it, right? You can still make money on it, but I don't think this is the sale that's going to break and make a new low. All right. There's a difference, right? Some reactions are just going to be temporary, while some reactions are going to give you a new leg of structure, right? So considering that this internal range liquidity right here is still untouched, we have to assume that the market will come up for that later, and later being sooner than later, right? So now, again, I am bearish, so I want the market to create what we call weak lows, all right? So I believe the market is going to push back up from this area and create this weak low pattern, all right? And this weak low pattern is what is going to be the future target for sales once we come up into this internal range liquidity right here. And once we come into internal range liquidity, what we'll have is strong highs, all right, mixed with weak lows, okay? So this is the strong high. We got a high here that's higher than the previous set of highs, all right? So now we got this strong M, okay? Because a strong high looks like an M, but the second arch is higher than the first, okay? That tells you that the high is likely to be protected, meaning that the market shouldn't go higher than that point. At least not, you know, at least not for now. In the future, that's different, right? Indices always end up going higher, at least historically. So I'm not saying that the market will never go higher than this, but I'm just saying for this week, I'm looking for the market to clear this consolidation that we have right here. All right. And once we clear it, we'll create a strong high right, like this. Okay. So that'll get created right here. Once that gets created, all right, we're going to then target the weak lows that are right here. Okay. Right here. And then once that happens, again, we can buy up to that point, and now you know exactly where you should be taking profit. So if we end up taking buys down here, you want to take profit right here. All right. You want to take profit at internal range liquidity. And then you start looking for your sell opportunity to target the weak lows. All right. Type one in the chat if that makes sense. If you don't understand liquidity, it might go over your head. But you know, you gotta really understand liquidity concepts, the difference between strong highs and weak lows. Market structure, trust me, it's not as important as you think because trends are trends, right? And there's different trends based off of different time frames. You could be in a uptrend on the 4 hour, you could be in a downtrend on the 1 hour, 15 minute. So what's more important than the trend itself in market structure is who is in control at the moment. And the way you understand who is in control at the moment is by understanding which side of the market is taking liquidity versus which side of the market is creating liquidity. All right. So when you understand that, you'll be able to trade in between these moves, right? Because somebody sees the downtrend, but somebody's going to have to wait until the market gets way up here before they could take a trade. And this, who knows? This might happen on Tuesday or Wednesday. We don't know, right? So you're going to miss out on all the trading opportunities from here to here because you're only paying attention to market structure. But when you understand how liquidity is generated and you understand how liquidity is created, then you can use that to your advantage to trade on multiple time frames. And also realizing that the markets are fractal, all right? Markets are fractal. All patterns appear on all time frames. So there's no reason to really wait for the higher time frame, in my opinion. All right. Understand something, guys. Trading is not about one singular trade. It's about a multitude, a combination of trades, right? Who can be profitable after taking 30, 40, 50 positions? So if you're only waiting for one or two setups a week, God forbid you lose both of them. Now you got to wait till the next week to make some money again. But if you're open to trading lower time frames, You still trade in the same patterns. They're just happening faster, right? So your outcome is happening faster. The results are happening faster, right? It's almost like fast forwarding the process of wins and losses to get to profitability. Because there's going to be a number of wins and losses. That's unavoidable. But if you're only taking a few setups a week, you're going to really handicap yourself, for your fullest potential. And I like, trust me, I've been trading a long time. I could tell you this from personal experience. All right. So, um, just going back, that was we had a real solid week this week. Last week that was Tuesday. And I'll just give you a couple of examples, right, of the type of setups that I like to take. And then we'll move on to gold, GU, and EU. So if you guys have any recommendations on what you'd like to see me mark up, just let me know and we'll take a look at it. All right. But understand something, guys. A lot of people, and I saw somebody, I was on Threads the other day, and somebody sent the chart of NASDAQ and they saw my man, Nas has just been consolidating, ain't no trades available. And he's looking at like the 4 hour to daily. So I'm like, just a word of advice, you might want to get off of the 4 hour and the daily chart. Because if you don't see a pattern on the 4 hour and the daily, all you got to do is go down, go to the 15, go to the 5. You're going to find a pattern. The same pattern you're looking for on the daily is available on the lower time frames. So the type of trades that we was taking this week, and the reason why we have a trade opportunity literally every day is because we're doing this on the 1 minute, right? We're not wasting no time. So this trade we took Tuesday, took it live. Target was hit in like a matter of minutes, right? We talking 15 minutes to get a 1-to-7 risk to reward ratio, 7x return on your investment. All right. Most people are waiting hours and hours and hours to barely get a 1-to-2 or 1-to-3. Right. So if you understand what you're looking for, right here, again, strong high, hezzy crossover. That's the same pattern that we look for. Strong high, hezzy, crossover, take out the hezzy, enter, ace entry, and then we target lows. All right. So something as simple as that is available to you on the 1 minute, but a lot of times people are waiting for the higher time frame to line up. Same thing here. You look over to the left, there's old highs to the left. We came and cleared old highs. All right. Consolidation, manipulation, right? So that manipulation gave us a strong high. You see the pattern, strong high, where the second high outtakes the first one. So that's what you see happening, taking place right here. The market gives us a hezzy crossover. You just can't really tell, but that hammer candlestick is a hezzy. So the market crosses over bullish, makes a new low. It came and cleared out the hezzy. So we ended up taking the trade right here, and then instantly we fall into profit, right? Then after we closed profit here, we turned around and we took this buy. Why? Because we have a strong low, hezzy, crossover, all right? And then we take out the low of the hezzy right here, and we took this buy. Trade genius. Did we take both of these trades? Right? Because a lot of people think we just be playing. We do not be playing on these charts. We really be slaying the 1 minute, going crazy, right? I mean, doing all of this in one New York session. 1-to-15, then turn around and catch the buy right back up. You know what I mean? So this is what I mean when I say the pattern is there. You just have to be open to getting down and dirty on these 1 minute charts. So let's take a look at this. All right. So you're starting to understand the pattern that I'm looking for. So now let's get into what we see happening here. Okay. So this is a weak low. Okay. Weak low because they're equal. Then we take the low out right here. Okay. So this is what we have. Weak low, take it out. Strong low. Okay. This low is lower than these two. So now we got a strong low pattern. Not only do we have a strong low pattern, right? We also have hesitation. Okay. Now it does slightly overshoot, right? I am aware of that. Market does slightly overshoot the previous area of supply. But look, it's not the end of the world. You could always look back somewhere else and find another area of supply, right? It doesn't really matter, okay? As long as we hesitate off of these areas, that's the only thing that matters. So, boom, we hesitate off of supply, we create a low, and we don't really clear it out, right? You can be on the 1 minute and you can say, oh, well, we took out this low, but look, that's not a real sweep of liquidity. Let's just make that clear, especially when you have a beautiful sell to buy candle right underneath it. All right. So if you got a beautiful sell to buy candle like this right underneath your hezzy, don't get caught up on this micro sweep like that. That just doesn't make sense. All right. Just mark up the low of the hezzy. That's all you got to do. Mark up the low of the hezzy, draw it into the future. All right. Boom. Mark up the low of the hezzy, draw it into the future, just like that. And what you notice is the market is reacting already. Why is the market bouncing right here? Why is the market starting to go up right here? Somebody in my community tell me. Why are we reacting before we hit internal liquidity?
It's bouncing off the demand zone.
Say again.
It's bouncing off the demand zone, creating liquidity.
Yeah, we're creating liquidity, right? I wouldn't say we're bouncing off a demand zone yet because we haven't really reached it. But the word creating liquidity is specifically what I was looking for. All right. So what's happening now is the market is bouncing prematurely, right? It's bouncing prior to hitting the zone we really want to take a trade in because they know that people are going to start chasing this position. Okay. I say this every Sunday, and I just hope it really resonates with y'all. And I even go through the trouble of drawing my nice artwork for you guys. All right. So you guys really can start to conceive and comprehend what I'm talking about. All right. So this is your trading app. This is your buy button. This is your sell button. Okay. See that? It's beautiful, isn't it? So we got MetaTrader, Trade Locker, Act Trader, whatever app you use. This is your phone. Okay. And this is the app that you use to trade on your device. All right. Boom. Now, the money that is here on your phone, whatever your account balance is, all right, it's not in the market yet. It's not in the market until you press buy or sell. Okay. And what happens is you have to understand that trading is a zero sum game. Okay. Meaning that there has to be losers in order for there to be winners. Okay. So when somebody wins $100,000, that means there's at least $100,000 worth of losers in the market as well. But what you realize is there's far less winners than there are losers. So that means there's a lot more losers than there are winners, but the few people that win make a lot more money, right? Because if you look at the statistics, they say like 90% of traders lose money. Could be more, right? I would like to see the statistics after people have been trading consistently for 3 to 5 years, but for what it's worth, that's what the stats say. All right. So what you got to realize is what they do is they engineer liquidity by creating price patterns that entice you or induce you to take trades prematurely. Because when you start buying here because you're afraid to miss out, or you start buying here, or you start buying here because you're afraid to miss out, what's happening is you have people all over the world that are taking positions. Okay. And when they take positions, they have what we call the entry, obviously. And then they have the stop loss. Okay. The stop loss is this, this area that I have shaded right here in gray, right here. This is your stop loss area. Okay. So when you push the buy button, now the money that is on your phone virtually gets injected into the market in the form of stop losses. Okay. So this is what the market is doing. It's creating this pattern early to get you to press buy early. Okay. So now that we have 1 million people across the world, or 5 million people across the world that are trading prematurely, what that does is it creates a liquidity pocket, right? It creates a pocket of money, okay, that's resting right here. All right. So now what happens is the market will manipulate and drop out of nowhere to grab their orders, and then the market will go in the direction that we always knew it would go. All right. So that's typically what happens when you get into a trade and then you get knocked out of the trade before the market goes directly to your target. And you say, damn it, I knew the market was going up, but why did you lose? Right? Or I knew the market was about to drop, but you got in too early, right? This happens all day, every day. And this is what the markets are doing. It is very rigged. But if you understand the price pattern, then you'll be all right. Let me check the chat real quick, guys. If it takes lows first, you start. If it takes lows first, would you start looking bullish? Probably. I'm not sure exactly if we talking about this, then yeah. Are these considered scalping techniques? You can call it that. But the difference is I scalp with real risk to reward. I don't scalp just to get a couple pips. You know what I'm saying? When I scalp, I'm still going for 1 to 10, 1 to 15 risk to reward trade setups. The other day, I caught like a 1 to 30, right? So it's like most people scout and they're not even making more than what they're risking because the moment they see profit, they close their trade. I'm scalping, technically speaking, but I'm still going for real targets. I'm still going for real risk to reward trade setups. You know what I mean? So it's a difference. You know, the philosophy is lower time frame. So by definition, it's scalping, but my targets are real. I'm not just closing just because I see blue. I'm not closing just because I see a little money. Markets are fractal, meaning higher time frame carryover to lower time frame. Yes, exactly. Um, yes, sir. Caught both of those in the same session. Oh yeah, yeah. Yeah, our New York sessions go crazy. The sell to buy, we really went dummy. This was a great week though, no lie. This was a great week. I think it was Wednesday or Thursday. We literally had four different trades, that is, hit targets on one session. So it's like I mean, man, it's like, damn, after you do that a few times, it's like, yeah, you really, we really onto something. So I believe that we building up liquidity right here. All right. We building up liquidity right here. And this is what we also call trend line liquidity. If you want to get real specific, when you see the market doing stuff like this is trend line liquidity because a lot of traders use trend lines as their strategy, right? So like it shocks me. I'm surprised people still use this type of stuff. But I guess it's a big planet. Just because I don't use it or people that I know don't use it doesn't mean there ain't somebody in the world using it. So this is what we call a trend line liquidity. All right, it's a buildup, and then it's gonna get snatched, right? And once it gets snatched, it's gonna create strong lows because this low is gonna be lower than this low, and then that's gonna give us that W that we're looking for. Y'all see it, right? That's gonna give us the strong W, right? So now we have the low here, and then we have the low here, but this low takes out the previous low. So the thing is, we're going to take the trade in anticipation that it's going to go bullish, right? Because one thing y'all got to understand is if you want to get excellent entries, I'm talking wick entry, you cannot wait for the market to react. I'm gonna just be honest. Too many of you guys are waiting too long for the market to react. So if let's say I want to catch a wick entry buy, okay? Believe it or not, as scary as it looks, and I said this last week, so this might be, repetitive to some of you guys, right? If you want to catch a wick entry buy, then you have to take the trade when it's dropping and it looks like this. All right. So let's say the market is dropping and now you start buying right here, right? You take buys right here. And then let's say this is a 5 minute candlestick. Okay. By the time the 5 minutes is over, the candle could look like this, right? By the time the 5 minutes is over, it can look like this. And now your entries are down here Because the candle looks like this now doesn't mean it's not going to look like this in 5 minutes, right? So the problem with a lot of traders is y'all wait for it to look like it's reversing before you get in. But if you wait for it to look like this, guess what? Now your entry is up here. And this is why a lot of people risk to award sucks. Because if I get in down here, I put my stop loss right beneath the candle. And now my target is way up here somewhere. But if I wait for the market to look like this, now my stop loss is big. And now it affects my target, right? It affects my risk to reward. Now I get a 1 to 2 instead of a 1 to 10, right? So trading with anticipation is key to your ability to make money, guys. And I was talking to one of my mentees earlier today, right? A lot of people focus so much on discipline, and I'm not going to sit here and say discipline is not important. Obviously, discipline is important. We know that. But you want to know what's more important in my mind is having a good strategy. Because if you're being disciplined doing the wrong things, it's never going to pay out for you, right? A lot of people are disciplined, but just disciplined in the wrong areas. Some people are disciplined in smoking every day. Some people disciplined in drinking every day. Some people disciplined, like you're disciplined in the wrong areas. If you trade this way, you don't even have to be that disciplined. I'm gonna be honest, because one win is gonna carry you, right? If I'm catching 1 to 10 risk to award trade setups, 1 to 15, 1 to 20, how disciplined do I have to be really? So now instead of me, debating and negotiating with myself on whether or not I should take a trade, I just take it. I don't care because I know whether I win or lose, all I need is one win to make back my last 10 losses. So trust me, I'm not saying to be reckless. I'm not saying that. But what I am saying is the right strategy can take you further than focusing all of your energy on being disciplined. Because if you're disciplined, but your risk to award is 1 to 1, 1 to 2, you still putting unnecessary pressure on yourself to be right at least 60% of the time to make money. When you're trading 1 to 10, 1 to 20 risk to reward trade setups, you can be right 10% of the time and make money. You understand what I'm saying? So now the thing that makes you profitable is not discipline, it's technique, it's strategy, it's execution, right? So, like I said, I'm not saying don't be disciplined, but what I am saying is a strategy will take you further than just discipline by itself because we're humans. You're gonna make a mistake. Like it's inevitable. But how the mistake don't have to hurt you. You know what I'm saying? Like it's like flipping a coin, but when the coin lands on heads, I get $150. When the coin lands on tails, I'll lose $10. Now, I don't know about y'all, but I could lose five, six, seven, 8 times in a row, and I'm gonna keep flipping that coin because all I need to do is win once. So this is why I trade reactions, right? I trade on a 1 minute time frame, and I'm literally guessing the candle that's gonna react. Like when the market reaches my point of interest, I'm literally predicting which candle is gonna react and cause the reversal because I'm putting my stop loss right beneath that candle. You see the trades I took over here, the stop losses are basically non-existent because I'm literally putting my stop loss right underneath the candle I got in on the 1 minute chart. You know what I'm saying? So that's why y'all probably don't see me send too many signals out because this shit happens fast, bro. Like it happens so fast. Like I really don't even have time to type out all the coordinates and stuff. So, I do send signals, but just not a whole lot. You know what I mean? But this is the not the G, the Nas setup that I'm looking for. So get prepared, man. Get prepared for this tonight or possibly in the morning. I prefer to take it in the morning, to be honest, because time of day is very important for me. All right, time of day is very important in the way that I trade. All right. So Nas, this was a signal I gave out to you guys. It hit TP2. It did take a minute, I ain't gonna lie. It took a little minute, but it did hit TP2 at 3,600 finally. Right. We waited on that for a little minute, but it did hit. And again, you see the stop loss is a bit bigger for signals because again, I'm predetermining what's going to happen versus just reacting to it live, right? But overall, it's the same concept. Strong highs, weak lows. All right. Strong highs, weak lows. The market created a strong high up here. All right. Made a new low. And then when it came back up here, we see the market started ranging. All right. And then it came and took that high out. All right. So the market essentially did this, right? Started doing this, and then it came and just knocked that high out, right? So this is essentially that strong high pattern that we was talking about. That is this. It just looks a slightly different. It's like this pattern right here happens in different shapes and sizes. Okay. It's not gonna always look like a perfect McDonald's arch like M. It's not gonna be a perfect M every single time, right? Sometimes it's gonna look like this. You know what I'm saying? But you have to train your eyes to see the pattern properly. All right. So when I seen the market reacting before it hit internal range liquidity, I already knew what was about to happen. I said, okay, we reacting underneath internal range liquidity. That means that this is a buildup. That means that this is a false sale. That's a fake sale. They're gonna come back up, hit that, and then we're gonna drop. That's why I put this as a sell limit, right? And you gotta think, like, what is somebody seeing to call a sell limit right here? I call it the sell limit over here. And then it hit perfectly days later. That's just how accurate this technique really is. All right. So you got to understand internal liquidity and how it works. So now what it is that I see is essentially the same thing. All right. Essentially the same thing. I'm going to take another sell, okay, right here. All right. I'm taking another sell at 36595. Okay. Why? Strong high, heavy crossover. All right. So here we came and we took out internal liquidity right here. And we also took this sell on live stream as well. So we ain't missing nothing. We took this on live stream and targeted these lows. So, the pattern works everywhere. You see what happens. Strong high, hesitation, crossover. We come take out the high, and then the market makes a new low. That's how market structure really works, right? But a lot of people are skipping those steps. All right. So now what it is that I see taking place now, all right, give your boy a follow if you're getting some value. Show some love. It would be much appreciated. I'm dropping more content too, by the way. So, more trading content on the way. But again, Hezi crossover, strong high, Hezi crossover. All right, you see it? This little indecision candle right there is my internal range liquidity. All right. So now, okay, I see the market reacting right before we really fill in this zone. This is a good sign. So it's the same thing that you just saw on GU, the other trade I sent out. It's the same pattern, right? It's the same pattern. Now what's going to happen is we're going to manipulate up and then we're going to drop again. This is consolidation. We're going to get manipulation. Then we're going to get continuation to clear out lows. That's what's going to happen. Right. So now we could take the trade, stop loss above this high up here. All right. So this should be about 12 pip stop loss for about a 70 pip target. Right. 12 pips. It ain't bad. It ain't great. Like if I was taking this live, my stop loss probably be like more like 5 pips. But again, since it's a signal, you gotta compromise. You know what I mean? Like live trades and signals are a lot different for me. You know what I mean? Like I prefer trading live, but a signal with 12 pips, I mean, that'll do. You can't complain too much about that, right? But again, when you look at the lows, what do you see? You see target, right? You see trend line liquidity building right here. All right. So you got this tap, you got a second tap, got a third tap to this line. That is, okay, that is trend line liquidity creating a future target. Okay. So now we know where our future target is. We got a strong high, we got a hezi, got a crossover that made new lows. So this is essentially what I'm looking for to have happen on GBP USD. So definitely get ready for that. All right. Let me check the chat real quick, y'all. Row, yes, I do trade live. I do trade live. Yeah, Cam, let's go crazy this week, bro. I know you've been getting money, but I know you got other businesses, man. But let's go crazy this week, man. I ain't seen you go crazy in a little minute. How can you get better knowing when the candle will start to flip? It's really look, and this is why trading, good question, KM80. That's a good question, right? And this is why I say trading is one of the most spiritual things that you'll ever do in your life. Reason being is because when you really think about the concept of trading, it requires a lot of higher faculties. And when I say higher faculties, I mean the things that are not physical, right? Intuition, perception, reasoning, right? Those are the things that are almost like God given in a sense, right? But you can still work on it. Make no mistake. You can still develop those skills, but you have to spend a lot of time with the markets, right? Don't get me wrong. My strategy will teach you, it will expedite your learning curve as fast as humanly possible. But at the same time, you have to spend so much time with the charts that you almost develop this intuitive telepathic relationship with the markets. Like if you've been in a relationship for 10 years with somebody, you could start finishing each other's sentences and knowing exactly what each other think because you've been with that person so long, right? It's the same with the markets. I've been in a relationship with the markets for so long, it's almost like these are words to me. These are sentences like clear as day for me to read. You know what I'm saying? And this is what you got to understand, like not to go too deep, but what is this? How is this any different than anything else that we read or write or anything like that? It's all letters, it's all numbers. If you look at this word up here, it says Wallstreet Ray, because we all agree on it. But if you really just identify what it is, it's just lines, patterns, it's squiggly lines, and all this shit. But what we do is we add reasoning to it, we add our intelligence as humans, and then we create a language, right? So it's the same with these patterns. This is no different than any other line, squiggly line, like a letter. But when you spend so much time with it, you start to, understand it. You know what I mean? It's like if I dropped you off in the middle of the jungle somewhere, or if I dropped you off in another country for a decade and I said you had to learn the language. If I dropped you off in China for 10 years, you would learn the language because you have no choice. You know what I mean? Your mind is going to adapt to the environment to understand how to read this information properly. All right. So that's the long form answer. But yeah, that's pretty much what it is. Um I'm just going through the chat right now, guys. We're gonna go to gold and EU here in a sec, all right? LS, yes, I trade live. Uh what's your confirmation to pull the trigger on a 1 minute? Do I look for any sign of weakness? I think I just answered that with the candle, with the candle breakdown. I don't wait for the sign of weakness. If you wait for the sign of weakness, you're too late. If you wait for a sign of weakness, you're letting the weakness eat into your profits. If I wait for a wick to take the trade, I'll never catch the wick. You understand what I'm saying? The wick happens after the fact. If you want to catch a wick entry, you need to enter when the market looks scariest. So no, I don't wait for confirmations. My confirmations are different. All right. Anticipate once. Yeah, Devon got it. Devon got it. Yes, sir. I'm about to go over gold here in a sec. So you trade live with the run the play bro. Not exactly. No, no. I believe that's Mr. Justin Owens chat, if I'm not mistaken. But no, I don't drop my links in there, my live links, because it's like five other people trading at once. So no, I actually don't drop my New York session link in that other chat. I have my own community for my live trading, but I'll drop a signal in there every now and then, you know what I mean? But I like to just, keep y'all fresh with the weekly outlook. I feel like that's my good deed for the week. And I drop a few signals here and there. But other than that, my live trading throughout the week is done in a separate community, right? I'm not trying to self-promote or nothing, no, because I know it's other people from other communities here. Look, if you're happy where you're at, by all means, stay there. I'm not going to convince you to go nowhere, nothing like that. But, if you really want information, I'll give it to you. But my goal here is to not try to convince y'all to join mine over somebody else's. If you resonate with my technique, that's different. We could talk about it. You know what I mean? And to give you a plan of action. But yeah, that's the reason I don't drop my links in that chat. It's like Abel drops his, Vaughn drops his, a couple other people. I'm just like, at some point, it's like, we got like 15 people trading the same session. It's like, that's how people get confused. So, I just let them do their thing. But so far as gold is concerned, again, guys, very simple. Which side of the market is taking liquidity? Which side of the market is creating it? Okay. Which side is taking? Which side is creating? So boom, we clear lows. Okay. We clear lows here. Market pushes up, hesitates off a supply, clears lows, makes new high, right? Here we clear lows again, clear lows to the left, push up, got a hezi, crossover, come down, take out the hezi, make another strong low here. All right. Now the market pushes up, hesitates, crosses over bullish, makes weak highs. All right. You see the weak highs? So look, we have an M with high here, high here. So we got relative equal highs. So boom, we got an area of demand down here, but we have equal highs. Okay. So that's the main giveaway right there. That tells you exactly what gold is going to do. All right. All right. This tells you what gold is going to do. So again, we got weak lows, excuse me, weak highs. We did come and tap this already though. Okay. So that is important to know. We came and tapped this already, but the reaction was not very strong. Okay. So here's what I do. When I see the market tap underneath some weak lows like this, but the reaction ain't strong, this is where I look for my ace entry. Okay. My ace entry is when I like the zone, but I don't like the reaction that the first touch gave me. Okay. I like this area for a potential buy. Okay. This gray area right here, that looks good. What does not look good is this reaction. Okay. So when I like the area, but I don't like the reaction, I wait for a second touch. Okay. In the second touch, I want it to take out the first one. All right. So now we got what I call my ace entry. And then I take the trade right here, anticipating it'll react. Right. So I don't want to wait until it's a strong low before I get in. I want to take the trade anticipating that it will be a strong low in the future. Right. Because if I wait for the reaction, I'm too late. You need to take this as it's dropping. You need to take it when it looks scary as hell. That's when you get the perfect entry, right? Again, if you wait for a reaction, how many times y'all took a bullish engulfing candle and you went into drawdown instantly? like type of dollar sign in the chat that's happening. You waited for that confirmation you was waiting on, but you took the trade and it instantly went in a drawdown. That is happening because you're waiting for signs of strength before you take the buy. That's not what you're supposed to do, right? You have to anticipate it, right? Now, look, you can do that. I'm not saying you can't do it, but what I'm saying is if you want excellent risk to award that is so good, it protects you from losses, right? This is what I said earlier, right? We got over 70 on the call, so I'm going to repeat what I said earlier. What is more important than discipline then is the strategy. The strategy is more important than discipline. Reason being is because the only reason you're juggling with all these different scenarios, like, am I having FOMO? Am I revenge trading? Am I, is this the trade I should take? Is that the trade I should take? The only reason you have these types of conversations with yourself is because your losses cost too much. If your loss was damn near non-existent, you wouldn't think twice before taking a trade. So what I do is I teach you guys how to have the best risk to reward trade setups ever. And I genuinely mean ever because I personally have not seen people get 1 to 30s, 1 to 40s as like 1 to 10. Like, let's not even go that hard. Let's just say 1 to 10, 1 to 15. I could do that with my eyes closed. I don't see that happening very often. So when I say best risk to reward ever, I genuinely mean that. That is what saves you. That's why I could take multiple jabs. And you got to look at trading like a game, right? Any sport, any game, they give you more than one chance to score. They give you more than one chance to make a shot or to hit the base or hit the ball and get on first base. You get 3 strikes, right? Football, you get 4 downs, right? Most of the time it's 3 and out. But if you're feeling real good about yourself, you'll get 4 downs, right? Best shooters in the NBA. They shoot what, 36, 38, 39% from three. Every now and then you got a guy that's shooting 40, 42, 43%. But they're not even gonna do that every single year. That's one year when they get super hot and they have like a career best, right? But most on average, the best shooters in the NBA shoot like 36, 37% from three. So you got to realize the people that are the absolute best at what they do, they are more wrong than they are right. So you got to look at trading like that, right? Trust me, I want to be right as much as possible, but even if I'm not, I should still be profitable, right? And what I did was created a strategy that allows us to be wrong often and still make money. So the question you got to ask yourself is, do you want to be right or do you want to make money? Because there's somebody with a 30% win rate and they make 6 figures a month. And then there's somebody that wins 90% of their trades and they barely profitable. You'd be surprised, right? But these are the people who will give you a trade with a 50 pip stop loss, and the first take profit is 20 pips. It's like you can have a short take profit because you want to light up the chat or you want everybody to feel good about themselves. But I'm not here to make you feel good about yourself. I'm here to help you make money, right? So if you're risking more than what you're making, all you need is a couple losses to take out your win streak. Me, I can have a losing streak and make one trade win and make money. That is the way you're supposed to trade. I'm not here to come discredit nobody's strategy, but I'm telling you, this is the way you're supposed to trade because you're putting too much pressure on yourself if you're doing it otherwise. All right. So take gold when it gets down here. All right. It can hit 4990, but I would like for it to come a little bit lower. All right. Like 4987. Right. 4987. Take gold on up. Okay, and you could take it up to these highs, or at least this hezzy up here. It's a hezzy up here that it kind of already got tapped into. I remember Devon, you caught this one last week, bro. That was nasty. I don't know if you held for this big drop or not, but I remember you sent this trade setup in a chat last week, and you caught it the moment it wicked that hezzy, right? Now, it did wick the hezzy, but it barely touched it. So I'm open to the concept that it might come back and tap that area again. So if that is the case, I do want to take profit right here, or at least partial profit, just in case, right? Just in case the market wants to, hit that area and then give me some type of reaction. And it's not to say the market can't keep going, but it's just, it'll feel good just to secure some partials, right? So first take profit, you want to target these highs. All right. Second take profit, you probably want to, get up here, take a little bit more off the table, like 50.77. And then, let the rest run just in case the market go bullish. Who knows? Trump might drop a bomb on Iran or something and gold go to 6,000. You never know. You never know when you're messing with gold. It's not a laughing matter, but again, you never know when it comes to gold, and you never know with this administration, right? So, it's safe to leave a runner on gold. You know what I mean? Like, I'm super glad the market done reset. I mean, that bullish run was so crazy, bro. I was missing out on money left and right because I don't know how to trade like that. I'm gonna be honest. Like, I was catching moves here and there, but it was like every day the market just going up in a straight line. I don't like that because it go against my belief as a trader. I was taught to buy low, sell high. When you just wake up every day and the market just, printing bullish candles, it's like, damn, what am I supposed to do with this? So I am glad that gold had that massive sell-off. I feel like it gave the market time to kind of reset and, just come back down to earth a little bit. So now we can, trade real patterns. You know what I'm saying? But yeah, that's dope. Let me check the chat again. 4,900. Okay, okay. KM80. Okay, I see you. I see you. I got you. I got you taken care of. Don't worry. Also, guys, what'll make it easier, just because I don't want to take too much time in the chats, what would make this super easy is if you guys just give me a follow here on Instagram and just shoot me a message, right? Shoot me a message. That'll make things super easy. Just to be able to respond to everybody without taking too much time on a Zoom, because this is a recorded call, right? So I would prefer to not, when the, not have take too much time in the chats. But I am answering questions, especially about the charts, all right? They say you resonate with the 1 to 10. I bet it's not too many people that don't. I'm telling you, man. Like, I'm telling you, like when you realize that nothing is gonna open up your mind more than when you've been on a losing streak and one win brings you out of it. That's gonna change your entire paradigm about trading. That's gonna change everything about trading that you ever known, right? So, that's my goal for you guys is to show you like, yo, you ain't gotta put too much pressure on yourself, bro. Like you could really just wake up, take certain opportunities, and win or lose, you're gonna be right eventually. You know what I'm saying? Like it's the law of large numbers. Nobody's gonna win forever, nobody's gonna lose forever. So if you're taking the right type of setups, on your worst day, you might have a little losing streak. But that's why I also give myself, multiple opportunity. You know what I'm saying? Like I don't give myself just one chance every morning. Like I give myself multiple opportunities to make money every single morning, right? So, that's one of the main things that helps me is just knowing that, it gives me extra peace of mind. You know what I mean? It gives me extra peace of mind. But for y'all that's asking, you know what I mean? No pressure or nothing. But if you're asking, that's how you tap in. All right. That's how you tap in. But yeah, let's keep it going. Let's keep it going. Euro USD. Euro USD. I saw this sale too. I saw this sale. I wanted to take it, but it was so ugly. I was like, man, I ain't gonna rush it. But that little hezzy crossover to the downside definitely peaked that. I'm gonna be honest, y'all. Focus on GU. This one is not nearly as nice as GU was. This is more like it's just ranging a little bit. If I had to not guess but speculate what it was gonna do, I would say we're gonna clear, highs here. More than likely, we may get a buy scenario down here, right? And market pop up to clear these highs and then possibly start going bearish, right? It's rare that I don't have a clear setup, right? But this one is just a little too choppy for me, right? Usually I could find something, and I'm sure I can, but it's just like, do you really want to risk money on a certain opportunity? Like I'm cool taking jabs here and there, but I still want them to make sense, right? So I don't want to buy here just because it's still a weak low at the end of the day over here. We never cleared this low out. So that would be an ill-advised buy, even though I do feel like the market will work its way back up. We just gotta, see what pattern it wants to create. Maybe we clear out these lows while respecting this area of demand down here, right? Maybe that would probably make a little more sense in my opinion, because it seems like we got, multiple buildups of liquidity. You see, you got a little liquidity right here built up. Then you make these equal lows. So maybe this is like we took out the lows here, created equal lows, we pushed up. Maybe we get an ace entry that takes us outside of this consolidation, right? But yeah, like I'm not gonna take a trade on this right away. Only reason I take a trade on this is if my other setups like just don't play out at all. But if not, I probably if the other setups don't play out at all, I'd probably be looking at like 1845, right? Like 1845 for a potential buy opportunity just to pop out of this consolidation, take out some of these highs. And once we take out some of these highs, we may realign with higher time frame structure. All right. So that's what I see there. All right. It doesn't look as good as GU in my opinion, or gold. All right. So, quick recap, guys. Again, I usually go over all the currencies, but lately I've been narrowing down my focus just because it's not necessary to go over every single pair, right? The more pairs you trade, the more calculations you got to do in terms of, keeping a respectable risk to reward. If you got five different setups you want to take on five different pairs, now it's like, okay, what should I risk on this one versus that one? And it kind of gets confusing, right? So I like to narrow it down to, gold, NAS, GU, and EU, right? But with that said, I don't mind taking a look at other currencies if you guys like me to, right? So let me know, is there anything that you guys would like for me to look at? Okay, I say K says look at Euro AUD. All right, I'll take a look at Euro AUD. And is there anything else that you guys would like for me to take a quick glance at? I'll start with Euro AUD. If there's anything else, let me know. Just drop it in the chat and we'll take a look at it. All right. But let me know while I'm marking this up. Let me know what y'all think about the session. Are you guys learning anything? Do you feel like this style of trading resonates with you guys at all, or you know, it's no right or wrong answer. I'm just, is what I'm saying making sense to y'all? I want to make sure it's making sense. I hate when people get off the call confused, but they afraid to speak up. GJ. Okay. Got you. Got you. GJ, UJ. Okay. No problem. No problem. Let's do it. Let's do it. Let's do it. Let's do it. GJ and UJ. Restored your confidence in what's possible. Hey, that's why I'm here, man. That is why I'm here. That is why I'm here. You got in late, so you missed most of it. Oh, I hate that, Latoya. I hate that. There will be more sessions, though. No worries. So as it pertains to Euro AUD, all right, Euro AUD. So what we got here is weak lows, okay? We take the lows out. Market hesitates, crosses over. We come and take out the hesitation. Again, market hesitates off a supply, crosses over bullish, but the hesitation clears out a low. So that is now an area of demand right here, all right? So with this being an area of demand, I believe the market will come down for this area. Also above that area of demand, what do we have? We just got the market ranging right here, all right? And we also creating weak lows in the process. So just this little weird area consolidation, right? So we want to come and clear that out because we know some people are going to try to buy from this area. You know, your support and resistance traders are going to be trying to buy from this area, all of that type of stuff, right? So what we're going to do is wait for that to get cleared out, come into this area here, all right? And as we come into this area, we're on the lower time frame, looking for particular reactions, right? Anticipating reactions that can push us up to take out these highs right here, right? So that's what I would do for the best risk to reward trade setups. Again, keep the stop loss to a minimum, keep the targets to a minimum. Again, right here it says it's about 1 to 8, 1 to 7-ish. But again, if you're taking it live or you're like it's different if you take a signal versus you're actually watching it on the 1 minute. If you're watching it on the 1 minute, that 1 to 7 can turn into a 1 to 12 easily, all right? Because you're playing 1 minute reactions instead of just predetermining what the risk is going to be before it happens. All right. So that's what I would do on Euro US or Euro AUD, excuse me. That's what I would do on Euro AUD. I could definitely see that pushing up. It's been dropping for a little minute. And it can keep dropping, make no mistake. But I think before it keeps dropping, we probably got this high we probably want to take out first. This high here. Maybe the market respects this. That's a possibility, but I'll be willing to buy up at least until this high right here. All right. So keep your eye on that. Keep your eye on that. No problem, Suzanne. Glad you enjoyed. Saucing, my guy. I'll see you on New York session, brother. What else y'all say? Y'all said GJ and UJ. Okay. GJ, we was anticipating bearishness too. We was definitely anticipating bearishness. I was thinking about taking it here, right? I did not take this trade though. Like I said, it's every day you get on the charts, you gotta see a fresh reaction, right? Or do a fresh analysis. At first, I was anticipating a reaction from here, but again, it was really based off of this first reaction right here, right? Based off of that, I was like, yeah, we could probably come up, clear these highs out, and then drop. But the slower the candles got, the less attractive the move became for me because I like to take trades when the candles are big, right? Because that means that somebody else other than retail traders are participating. So I don't like taking trades when only small candles are present. I like to see a big candle come into play and then I take that trade. So what happened here is, obviously we cleared highs out and then the market start dropping, right? I think this is a trend that'll continue, and it came for these lows like we already had marked off. I do think this is a trend that'll continue because I believe that if I'm not mistaken, I think the Fed is buying yen now. Japan is what's the word? Is pretty much like unloading a lot of their US, dollars and treasury and all that other stuff, right? So with that, I do see further like dollar weakness because Japan is one of the largest holders of US dollars. Now that they're kind of offloading that to buy yen again, I could see a lot of the, UJ, GJ, a lot of those pairs going bearish, right? So now what it is that we have here is you see the Hezi crossover pattern. Okay, the market came, cleared the Hezi for a perfect wick and then dropped again. Okay, so here we got a Hezi makes a new low. We come and clear highs, then we drop again. So here is another Hezi. All right, right there that creates a weak high. So I'll mark off the weak high. This is 212.8, all right? 212.8. So I believe the market will go bullish up until 212.8. All right. So now we look over to the left and see what did we react off to the left. All right. This was a zone I had already marked off, but the market never tapped into it. But the zone is still valid, even though the market didn't tap into it when I wanted it to. The zone is still valid because if you look over here, we have a bullish hezzy crossover, right? So that hezzy creates weak lows right here. Okay, so you see the weak lows it created. You got a hezzy right here in the form of internal range liquidity. So we just came and tapped it. So now what do we have? We have a strong low. All right. This is also a strong low. So we have two strong lows right here. Then we have like a little impulsive candle, like, probably creating some imbalance on the 1 hour or something. All right. And then we got a hezzy crossover. So that's our bullish hezzy crossover. All right. You see the bullish candles. Like I said, I like to take trades in areas that have, big candles. And that looks like a nice, nice volume in this area right here, hezzy crossover. We come over to the left, the market just tapped off that area. So what I'm anticipating now is for the market to go bullish, right? So we tapped into that area, created strong low. All right. Market reacts, comes up, makes this high. It's not very entice. It hasn't really enticed me yet in terms of like this price action. This price action still looks a little sloppy. So I could still see the market maybe pushing down one more time before it goes up. All right. Like it hasn't really convinced me with the bullish push yet. So again, I like the reaction. I like the zone, but I don't like the reaction that much. So I'm anticipating that the market will likely either come and take out this internal liquidity right here and then go bullish, or we'll take out that low completely and then go bullish, right? So that would be my option A. This would be my option B. Again, I give myself more than one attempt to take a trade because my stop loss is going to be tight and it'll protect me. Even if I lose one, win one, I'll still come out profitable. So best case scenario here is you get in underneath that low for an ace entry, and then we target this for a 1 to 12. All right. So you're taking the trade from internal liquidity to internal liquidity. So this is on the buy side down here. This will be on the sell side up here. And this is how you play ping pong with the markets. Right here, I do see an accumulation taking place. You see the first reaction here, second reaction here. Right here, we'll probably get the spring, right? So this looks like, like a wick-off schematic almost, right? For the people that understand wick-off logic, right? This looks like an accumulation schematic taking place right here to, project the market back up. All right. You check the chat. Yeah, I appreciate that, Keelan. Much appreciated. Much appreciated. S&P 500. I like to stick to Nas personally. I like to stick to Nas myself. But again, guys, if you're getting value, feel free. Please give your boy a follow. I'll be dropping more content on my YouTube, on my Instagram, and obviously trading live in my community. All right. So appreciate y'all just for locking in. As always, I'll take a look at UJ real quick and then we'll get up out of here. All right. Same thing though. All right. We'll probably find a little bit of bullishness. All right. To start the week, but I believe this will have the same fate as GJ. All right. So again, which side of the market is taking highs? Which side of the market is creating weak lows, right? So this right here tells you what the direction is going to be, right? Strong high, weak lows. This low hasn't taken out previous lows, but it could still probably go bullish just because of like the way it's been accumulating, right? So it goes bullish and takes out all these weak internal structure points and before it goes bearish again. So I believe UJ will probably start the week off, going bullish. All right. But obviously, once we clear out this internal structure points, come up here, we're likely to sell, right? Because up here is where you got a strong high heavy crossover. You don't have that anywhere else, right? Except up here. Okay, so you want to analyze all the structure in these swings, all right? And you want to see which one has the strong high heavy crossover. That's right here. So you wait for the market to come back up there before you sell, right? Or you could just make the decision like, look, the next sale is going to happen up here. But in order for the sale to take place, a buy has to take place temporarily, or a short-term buy has to take place in order for the sale to even be possible, right? So now I could take this buy before I take this sale, right? Just because and that's simply because I know where the sale is gonna happen. Just because now that I know where the sale will happen, I know where the buy should happen as well. And the buy will probably happen here because it still needs to leave weak lows behind in order for the sale to take place. So this is why I feel comfortable knowing that the buy will probably happen now versus doing this. I don't think it'll take the lows because if it takes the lows, that will put this sale in jeopardy because now we'd have a strong high and we'd have a strong low down here. But if we have a strong high and we have a weak low right here, that makes this sale in the future that much more high probability. All right. What's my thoughts on prop firms? Prop firms are they can be dope, right? I feel like you need to build your confidence up by just being able to pull money out the market stuff. So I'm a big advocate for personal accounts, right? I feel like prop firms have a place, but it's just the concept of not having the rules and the stipulations. I feel like that adds a lot of stress to traders. I feel like that makes it a little more difficult for traders to succeed versus, just being able to take a trade and pull the money out. Like I had a guy lock in last week and he said he made a subscription back, in a couple days, able to pull the money out. Another guy, he was like, yeah, I just locked in 30 minutes ago. Got on a live session, made money like within 30 minutes. And now that's money that you can actually touch. So it's like I think prop firms are dope, but like once you really have trading down though, because if you're trying to use a prop firm to get your first profit or like just your first real bag, like I don't see that being like very conducive. But if you're trying to scale after you already got your strategy down, after you already have the trading psychology down, you got your patience, situated, because, a lot of people could pass a challenge, but getting to that payout is a lot different. You know what I mean? When you get time, can you explain your GU logic again real fast? Yeah, just give me a sec, bro. I got you. Shoot me a DM, Alex. Would love to have you back, bro. I definitely remember you, bro. Um, I'm not sure. I think so. I think it's the same. I guys gotta make sure it's active. I don't remember exactly when you were last active or not, but if it works, you can go ahead and use it. But just shoot me a message. I'll make sure you get the proper link. You know what I mean? Check your DM. You've been hitting me. You hit me on IG? Just hit me again. I'll be checking. I'll be checking as soon as I get off this call. Just hit me again. I'll be checking. I'll be checking for the next couple hours. Um, Prop firm or a side account. I say use both, bro. Use both. You can trade futures on your prop account, but I also trade currencies. So it's like I need to have access to both. Um, but yeah, so far as S&P, like it'll probably do the same thing that Nas doing, to be quite honest. But yeah, guys, that's about it for me though, man. I definitely enjoyed the call. We locked in for a good little hour and a half or so. So this was a solid call. Definitely appreciate, you guys just for being locked in, for being attentive. And I really enjoy doing these on Sundays. Like I said, just making sure everybody is, locked in and ready. And ready for the week ahead. Last week we went crazy. I'm ready to break records this week. All right, I'm truly, truly ready to break records this week. The strategy is tested, is stress tested, is bulletproof, is really everything it needs to be. So, I'm gonna challenge myself to even hit new levels in my trading journey. So, I appreciate y'all for just being active, man. Like me being able to speak my logic out loud on a consistent basis has really helped me as an educator, but as a trader as well. You know what I mean? So, they say you learn by teaching as well. So I owe a lot of my success to y'all being willing to, listen to my thought process. So I definitely appreciate y'all as always. Much love to everybody. Yeah, this will go up on my YouTube. But again, if you want more live sessions, that will be exclusive to my community. All right. So I go live a lot more than just on Sundays. All right. So, but definitely I do my Sunday call for everybody. The Sunday call is a free for everybody. You know what I mean? But definitely appreciate y'all again. I'll see you guys on the other side. See you guys at the top in front of the top. Cause the bottom's way too crowded, man. Much love. I'll see y'all on the next one. Peace. Trade Genius. I'll see y'all Tuesday.